You're listening to the Options Insider Radio Network, the home of the Options Podcast. For more quality options programs, visit theoptionsinsider.com or search for Options Insider Radio Network in your podcast provider of choice. Listeners can also access all of our programming through our mobile app available in the iTunes and Google Play stores. Select programs are also available via live stream at mixlr.com/options-insider. That's mixlr.com/options-insider. Don't forget to follow along with your favorite programs and submit your own questions for the hosts at twitter.com/options, stocktwits.com/options, facebook.com/theoptionsinsider, or via questions at theoptionsinsider.com. Bitcoin, Ether, Ripple, Litecoin, and more. Cryptocurrencies and other digital assets are taking the financial world by storm. This exploding market provides everything a savvy trader needs: volatility, volume, and liquidity. Provided you know how to find it. That's where we come in. Welcome to the Crypto Rundown. Each week, we'll break down the latest trading activity, trends, and developments on everything from coins to tokens, futures, and even OTC options. If it's moving the crypto markets, then you'll find it on the Crypto Rundown. Now it's time to dive into the exploding world of cryptocurrencies and digital assets. It's time for the Crypto Rundown.
All right, everybody, that music means it is time once again for the Crypto Rundown, the program here on the old Options Insider Radio Network. We break down everything going on the crypto side of the fence. Going to talk some Bitcoin, some ETH, and everything else in between, the volume, the volatility, the OI, the unusual activity, SKEW, all that good stuff, and a lot more. My name is Mark Longo from theoptionsinsider.com, as well as, of course, from this fine network upon which you're listening to this program and so many others these days. Remember, if you like what you hear, keep those reviews coming so new folks can continue to discover not just Crypto Rundown, but the entire network. We've seen such a huge influx of people over the past 6 or so months, and we want to keep that coming. It's more important than ever in these trying times for folks to have a reliable source of information on these markets, and we aim to deliver that. And so if you like what you hear, keep those reviews coming in your platform of choice. As we keep on rolling into our first segment, it is time for the Bitcoin Breakdown.
It's time to explore the latest trending activity, trends, and developments across the world's leading crypto market. It's time for the Bitcoin Breakdown.
All right, everybody, welcome to the Bitcoin Breakdown, the portion of the show we break down all the action in the world's leading digital asset. Yep, talking Bitcoin. Of course, if the ETH heads have their way, maybe that won't be the case for much longer. But for now, it is still the big dog out there. Bitcoin come in today's show a little bit north of the 10,400 level, about 10,406 or so. That puts it off roughly 260-odd handles from last show. It was in the 10,660 range last show out there. So not a huge move, but the continued, shall we say, slow downside out there in Bitcoin land. And I say slow because we're seeing that reflected also in the volatility numbers out there. Remember, all this data coming at you, courtesy of our friends over there in SKEW land. Check them out, SKEW.com, for more info. It's still free, so kick the tires over there while you still can. Bitcoin realized volatility. Remember, this is looking back now. This is what the market has exhibited over the past 30 days in terms of actual volatility. It's at 54%. That's pretty much unched from this time last week. It's been 54% now for a couple of weeks. Now let's look forward. Let's look ahead. 30-day implied volatility, what the market is pricing in for future volatility out 30 days. That's also down. That's down to about 50% from 56%. What does that tell us? Well, that Bitcoin ain't moving a heck of a lot, really. At the end of the day, the volatility math is very simple. At the end of the day, it's pretty much how much is that underlying moving? Okay, that's what we're going to price in going forward. And effectively, we're not seeing much of that at all. In fact, right here, it looks like a little bit of an inversion. The 30-day realized actually higher than the 30-day implied, which is very strange. Usually the implied is pretty much always higher than the realized because you don't know what the future holds, right? You have to price in a little bit of a fudge factor, a little bit of wiggle room because you just don't know. It's a prediction at the end of the day. Implied, usually higher. That's what's known as the risk premium out there, and yet we're not really seeing that this week, which is somewhat interesting out there. But again, we're kind of hovering at these low levels, at least comparatively from a vol perspective for Bitcoin. So a little bit could change there pretty easily. The SKEW also down a little bit. It was about 6.2% last week. This week, 5.8%. So not quite as crazy put heavy as it was, but still pretty put heavy. Call the put actually has ticked up, though, on the open interest at least, which is kind of interesting. Looking at about 70% from 65% last week. So a little bit of a tale of two cities going on out there. Let's look at picking of the open interest. Let's see what's going on from an OI perspective. OI is pretty much back up at the highs we saw recently towards the end of August. Remember, August had a lot of run-up of volume, then it kind of all went off the board with the August expiration. But we said it before, crypto likes themselves some quarterly expirations out here. So September's now leading the dance out here, and we expect to see some paper flocking in. That's pretty much what we've seen. We're pretty much back up to even keel, right around close to a little bit north of 2 billion net notional OI across all of the leading venues. So we're talking DEREBIT, BAKKT, CME, LedgerX, OKEX, even throw in some bit.coms and even Huobi in there out there. DEREBIT's still leading the dance at number one in terms of OI. They have about 73%. That's about 1.5 billion worth of OI. Number two is CME out there with about 14%. That translates to about 287 million worth of notional. That's pretty high for them. They're pretty much right at their highs. Their high was 291 million recently. So CME coming on a little bit stronger these days. OKEX now in the third spot with 6% of OI. That translates to about 112 million worth of notional. LedgerX number 4 with 3. Actually, I take that back. Bit.com now number 4 with about 5%, about 92 million. Then LedgerX 3% with about 53 million. And BAKKT, unfortunately, down there with 0. 0 across the board. That means Huobi is ahead of them with their 1.1 million worth of notional outstanding. Let's look down to DEREBIT. They're still, of course, the leading platform out there. Drill down. Pretty much a light week out there on DEREBIT as well. 161 million worth of notional was the big day. That was on the 15th. Remember, we've seen much higher spikes recently, including on the 4th of September with about 227 million. And on the 17th of August, we saw 194 million. So 161 doesn't really pin the needle up there at all. Kind of a mild week, and that's reflected also in the overall vol numbers out there as well. Let's drill down a little bit, see what trades were interesting of any size or worthy of note. Again, a lot of them coming on DEREBIT. CME has been fighting its way into this as well, but right now it still looks like DEREBIT on the contract front with some, looks like mostly upside calls were in play this week, which is kind of interesting given it was a general downside trend for the lion's share of the week. We saw on the 16th, we saw the October 12,000 calls. That's a strike that's popular. We'll get to that in a little bit. 350 of those going up when Bitcoin was 10,986. Again, we don't have a side for that one. Also 300 of the Oct 12,500 calls going up the same day for 11, when Bitcoin, I should say, was 11,070 up there. I'll give you the prices, but they're in fractional Bitcoin. It isn't the most intuitive price levels out there. So those are kind of some of the larger prints. Also 200 lots. Looks like a vertical, the Oct 13,000, 15,000 vertical going up on the 17th when Bitcoin was 10,857. They went up for 0.0253 on the 13,000s and 0.0118 on the 15,000s, if that really means anything to you out there. Let's look at the big trades that are going up today. I put big in air quotes. Not the most active day out there today, but a little bit of paper. Looks like the 10,750 calls are leading the dance today with nearly 1,000 contracts over there on DEREBIT, followed by the 11,000s with just shy of 500 contracts. Well, before we get to strikes, actually, let's get to the months. I mentioned September is still leading the dance out there because it is the front month, A, and B, it's a quarterly. Crypto loves a quarterly. We could make that the title of the show pretty much every week. And September is getting back up there now. It now has exceeded August in terms of open interest out there. 86, almost 87,000 contracts open. August topped out around 62,000. Of course, it still has a little bit of a ways to go to catch June. June had 114,000 contracts open. Some of the bigger ones we've seen in a while. So September not quite there yet, but on the right trajectory. Then we go out to Dece next with about 32,000 contracts, and it all kind of falls off from there. The next one, October, ironically enough, and then March. So another quarterly popping up with about 18,000 contracts. Let's get to the strikes now, where the hot interest. Remember, we saw some verticals going up this week, 13,000, 15,000. Also saw the 12,000 calls active, and that's still where the number one aggregation of liquidity is out there right now. The 12,000 calls have just extended their dominance out here. They had about 13,400 for number one a couple of weeks ago. Last week it was 14,400. This week it's still number one with a whopping 17,100 contracts open on that strike. So for whatever reason, even though we continue this kind of slow decline, threatening the 10,000 handle to the dark side now, the 12,000 strike still just a magnet for liquidity, followed by 11,000 strike with about 15,200. Then it's all the rest kind of equal. We got 9,000 with about 11,000, 10,000 with about 11,000 contracts open as well. We've also got 14,000 and 16,000 with both a little bit shy of 11,000 open there as well. But it's still 12,000 for whatever reason has just drawn the interest of the trading folks out there. Let's see if the Bitcoin options on CME have drawn some interest, and they had actually a decent week out there. Remember, a lot of folks and a lot of outlets quote notional. I like to look at contracts whenever possible. These are, of course, 5x contracts, so multiply times 5 if you want to line them up with venues like DEREBIT and others. Monday was the big day last week on CME with 651 contracts. Doesn't sound like a ton compared to the tens and hundreds of thousands we see on DEREBIT, but still, compared to what they were doing, which was just a handful not too long ago. It's actually decent paper. Tuesday, 322. Wednesday, about 330. Thursday, not a lot on the tape really at all. And then Friday, 215 contracts. Looking at the futures, same story out there. A decent volume week. Nothing lighting the tape on fire. A decent paper today, about 13,500 contracts on the tape. Last week, a lot lighter. Friday was about 5,000. Thursday, about 8,000. Wednesday, same deal, about 8,000. Tuesday, about 5,000. And Monday, about 7,000 contracts. Let's see what our old friend, the BAKKT volume bot, has to say about what's lighting it up on BAKKT. We know the options aren't trading. Let's see if the futures are, let's see, about 7,780 going up. That's down 58%. That's not a good sign. And the open interest, actually the open interest ticking up a little bit, 10.6 million. So that's up 15%. So maybe there is some signs of life out there. The futures have a decent little robust business over there on BAKKT. For whatever reason, the options, not so much. Again, I want to dig into that a little bit more, see what's actually going on over there with the options. But for now, at least the futures, physically settled and one-to-one, you'd think there'd be some interest in those. And yet, for whatever reason, after their launch, which had a lot of fanfare, hasn't really followed up on the volume front. Maybe like some of our guests have posited, maybe the hype around physically settled Bitcoin futures maybe exceeded the interest in them. I don't know. It certainly seems like it hasn't translated into a lot of these physically settled contracts. Haven't really translated into a lot of volume yet. But still, there is time as we head on into the altcoin universe.
It's time to move beyond Bitcoin and find out what's moving the rest of the crypto marketplace. It's time to boldly venture into the altcoin universe.
All right, everybody, welcome to the altcoin universe, where we explore everything outside of that big dog, a.k.a. Bitcoin, see how everything else is stacking up. By the way, speaking of Bitcoin, as it compares to everything else, we saw that dominance rate continue to decline. It hit 57% last week. That's down from about 68% at the start of the year. I know all the ETH and the DeFi fans out there will be pleased to see that. Let's see if the top 10 market cap reflects that as well. Standard caveat applies. Take the overall numbers with a grain of salt, but I think the rankings, again, have some merit. Number 10, Litecoin, threatening to drop out of the top 10 at this point. How the mighty have fallen post they're having out there, with a little bit shy of 3 billion open for number 10. Number 9, Chainlink, a little bit north of 3 billion. Number 8, Crypto.com coin. Try saying that 5 times fast. Doesn't really roll off the tongue. Too many hard C's going on in that one. 3, a little over 3 billion there as well. Number 7, Binance coin, closing in on 3.4 billion. Number 6, Polkadot. Interesting. was not a highly ranked name not too long ago. Now, all the way at number 6 out there for 3.4, almost 3.5 billion. Number 5, Bitcoin Cash, about 3.9 billion. Number 4, XRP, about 10.4 billion. That means number 3, Tether still. XRP cannot unseat it. Number 3, Tether, 15.2 billion. Numero dos, ETH, 38.5 billion. That means number 1, back shy of the 200 billion level, is Bitcoin, 192 billion out there. Let's go out to the number 2 dog out there, ETH. ETH also taking a break this week, off about 32, almost 33 handles from last show. Coming into Showtime, it was at about 340 and change, and it was looks like about 373 and a half or so on our last show. Let's get to some of the analytics out there. Realized vol ticking up a little bit out there in ETH. Now, I remember we were talking about Bitcoin realized volatility around a 50-odd%. ETH, pretty much double that. 30-day realized, going back, how much vol it's exhibited over the past 30 days. It's up ever so slightly. It was 104% last week, 106% this week. That's a lot of juice, listeners. 30-day implied, hovering at elevated levels, but off a little bit. It was 77% last week, 73% this week. So a little more vol to be found out there in ETH land. So if you're looking maybe to harvest a little premium, maybe that attracts you. Maybe ETH is where you should be looking instead of Bitcoin. Overall volume, a decent week. Again, kind of like Bitcoin, not blowing the doors off. We saw about 42 million on the tape coming into today. That's actually one of the more active days, pretty much the most active day of the past week. The other active day was on the 17th with about 39 million. Let's look at the OI out here, see what's going on. DEREBIT has about 427 million open out there. That's still off its high, which was back in August of around 507 million. So it hasn't quite gotten back the August levels, unlike what we're seeing in Bitcoin, where September is kind of coming on strong out there. And let's see. Let's go on out to our old friend Ripple, giving up a little bit of the ghost, off about 1.5 cents from last show. Come into today's show, it's about 23 cents, almost even. It was about 24.5 last week. So that also isn't helping with that top 10 ranking. Bitcoin Cash and Bitcoin SV also feeling a little bit of downside this week, following the big dog to the dark side. Bitcoin Cash down about 12.5, and Bitcoin SV down about 16.5. And now it's time for you to take us in all sorts of fun directions. It is time to answer your crypto questions.
You've got questions about crypto. Who doesn't? It's time to find out the answers to your crypto questions.
All right, welcome to your crypto questions segment. This week, we're actually going to have a related question from last week. We had Alanist ask last time. He wanted to know about Bitcoin futures, correlated or uncorrelated to equities. We broke down some interesting data for the course of the past year. Obviously, it's been a tumultuous year here, but still brought out the point that the equities were a little bit more correlated than perhaps you might think to Bitcoin, with NASDAQ and S&P both nearly 40%. Of course, that's just over the past year, and we call that out on the show. This is obviously an outlier year in just about every respect. But also, these are the years when you want that lack of correlation to play out if it holds true. If it doesn't hold true now, it doesn't really matter in the other years. If it's not going to be correlated, you want it to matter back in the times of like March. That's when you need that lack of correlation to play out. And unfortunately, what we saw is the opposite. We saw Bitcoin highly correlated to equities because everything was selling off. So bear that in mind. But we have a related question this week from, what was the name of Phil Timms. Phil Timms wants to know, how do those correlation numbers hold up if you go back even further? Maybe 5 or 10 years. Is it still correlated or uncorrelated? Remember, Phil and everyone else who had similar questions out there, what we were using for this analysis was the CME Bitcoin future. Why do we use that? Well, we have some great data on that. A, B, we can compare it most easily to other futures contracts. So we could see the true correlation across asset classes, ags, metals, equities, whatever the heck we want to look at. We can do that very easily as opposed to taking a spot rate on one venue and comparing it to other things out there. Also, that's a reference rate, so it kind of aggregates prices across multiple venues, which should hopefully help smooth it out a little bit over there. But still, we had to go back only as far as these futures have been around. And of course, the Bitcoin futures launched in December of 2017. So while I would love to, at least for this analysis, go all the way back a decade or so, unfortunately, we can't do that, to the really early raw days of Bitcoin out there. But we can go back to December of 2017, so that's what we did, Phil and everyone else who asked this. So a few more years worth of data, almost 3 years. Let's see how those correlation numbers stack up. And we kind of expanded the purview a little bit as well. We got a little crazy. Let's go out to the ags, for example, the livestock. Did you ever wonder how Bitcoin correlated to lean hogs? Well, we did. And truth is, the answer is it doesn't. It's about 9% correlation. So if you were curious, if your lean hogs portfolio, if you were worried if it correlated too closely to your Bitcoin portfolio, don't worry, you're in luck. Class 3 milk, even less correlation, a whopping 3%. So Class 3 milk and Bitcoin, we could fairly say, are uncorrelated. Let's see. Gold ticking up a little bit now. Remember all that talk about digital gold with Bitcoin. Now we're talking about 18%. So still pretty light correlation, but there is some there. Silver, exactly the same, 18% as well. Copper, non-precious metal, not the same use case as gold or silver, much less, only 5%. So effectively uncorrelated over the past 3 years there as well. Let's go to another product category you guys like to trade a lot. Energy, in particular, WTI. It's been a hot ticket item, certainly over the past year. Not a lot of correlation to be found there either, about 13%. Heating oil, a little bit more, 15%, and RBOB at about 16%. So that's kind of interesting, but WTI is the main trading vehicle for most of you out there. That's only about 13%. Now let's get to equity land, what a lot of you came here for. S&P, 16% over the better part of the past 3 years. NASDAQ, a little bit less, 15%. Russell 2000, interesting. We threw them into the mix as well. They're about 18%. So again, very light correlation over the past 3 years. So that's something maybe all you out there have been cheering for, an uncorrelated asset class. That should embolden you a little bit, certainly less than it has been over the past year. Getting out to the rates category, so you're talking Eurodollar, 2-year, 10-year, all that stuff. Pretty much no correlation to be found. What was found was negative. It was an inverse correlation, but it was all less than negative 4%. So not a lot, effectively uncorrelated there as well. FX, another category that is often conflated with crypto. They call it, they call them coins. They think of them as a currency, so they conflate them with FX. Let's see how FX stacks up here. And again, same deal as the rates. Pretty light correlation. The euro was about 2%. The yen was effectively no correlation, uncorrelated there. And the biggest correlation we found was on the pound dollar, about 8%. But that was really about it. Effectively pretty uncorrelated there as well. So there you have it there, Phil, and everyone else who asked similar questions. How does this crypto correlation break down? That's as far back as we can go for the Bitcoin futures. Maybe we can try to extrapolate that a little bit and look at the reference rate itself. I think they have some back data for that. Unfortunately, it's not available right now during that platform. But I think you can go back and extrapolate what some of those reference rates would have been. But again, not all those venues were active over that time, so it might be a little bit more dicey there. But for hard and fast listed, active, traded numbers, we can go back to about December of 2017. And that's pretty much how the correlation stacks up. So it gives you a little bit more argument for the lack of correlation. But remember, it matters when it matters. And it mattered a lot in Q1 into Q2 of this year. And that's when we saw that correlation go pretty much to 1, if not beyond. So bear that in mind if you're out there looking at crypto as an uncorrelated asset class. And unfortunately, that music means we've come to the end of another fun episode of the Crypto Rundown. Get you in, get you out, get you on with your lives. We'll be back soon with all sorts of great content throughout the network. Tuesday, of course, Interview Tuesday. Wednesday, we have Education Wednesday. Thursday, TWIFO on the option block. Friday, Vol Views. More fun stuff scattered in and out throughout the week, of course. And then we're back on Monday with some hot seat and all sorts of other fun stuff on the next episode of the Crypto Rundown.
You're listening to the Options Insider Radio Network, the home of the Options Podcast. For more quality options programs, visit theoptionsinsider.com or search for Options Insider Radio Network in your podcast provider of choice. Listeners can also access all of our programming through our mobile app available in the iTunes and Google Play stores. Select programs are also available via live stream at mixlr.com/options-insider. That's MIXLR.com/options-insider. Don't forget to follow along with your favorite programs and submit your own questions for the hosts at twitter.com/options, stocktwits.com/options, facebook.com/The Options Insider, or via questions at theoptionsinsider.com.